Hi, I'm Peter Rose, founder of Longwood Currency Trading. Advanced Forex entry issue I'd like to discuss in today's video. And I'm outside because, before we start the video, we have to have travelogue with Peter. It's early January of 2024. It is freaking cold. And as you know, if you watched previous videos, I had my brook overflowed down there, and we had to dig this entire trench out along here, pull out the old piping and recreate a new culvert, which is where the water enters, and that's the analogy that I'm going to draw. Okay, so here we are at the other end of the brook. As you can see, we're changed our direction, and there's the brook coming out of the main culvert that goes up to the road up there and comes down through here to this new culvert that we've put in. Now, you'll have to visualize this, but that culvert before the excavation work, actually it was yesterday, was just a pipe in the ground. It's been there for a long time, and it takes the water off the mountain and funnels it down into the continuation of that brook down there, which becomes a stream. It's a little bit larger down there. And so the entry issue over there is different now than it was when we bought the house or through previous years, because the conditions changed. So let's go inside because I'm cold, and we'll talk about the conditions of change and the issues that involves in this analogy, and then relate that up to the Forex market, okay? Good, I'm cold. All right, but first I gotta get the coffee. I just gotta pour it and put a little cream in, and then we're on it. Okay. So let me explain this analogy. In the past, the normal flow of water that came down that brook was, well, the gauge of the size of the culvert and the orientation of the opening and the direction of the pipe that took, I mean, all that stuff that's involved, it was set up under certain conditions. So about a week and a half ago, 2 weeks ago, we had a tremendous amount of rain. And for this area, 5 inches, I'm sure we got 5. Our neighbors say they had a gauge and they got over 6 inches of rain. And so that entire area that I showed you where the culvert was just overflowing. I mean, it was like a waterfall, a cascading waterfall coming off of a high mountain. And it carried tree limbs and brush and tons of silt and gravel and small rocks down, plugged up the opening of the culvert, and then the water force was so strong it just forced that stuff into the culvert and filled the culvert up. The culvert was about this big. It probably filled it up 3/4 of the way. You get down there with a flashlight after we drained the water, and you couldn't see in the culvert. So the conditions changed and overpowered that culvert, and it created a disaster. Yeah, I mean, I understand it's not a big disaster, it's a minor thing. But regardless of that, the conditions changed, and that rendered the existing system to be ineffective, and it had to be replaced. And because it's replaced now, the water flow is different. When you're entering a Forex trade, there's two views of that you're going to have to approach. Number one is the starting view, where you begin your trading career. You're trading minis, or you're trading 2 or 3 full lots or something like that. You know, about a year of trading and 2 years of trading maybe. And so you're just getting used to the trading process, and either you're consistent making a little bit of money or you're not, or whatever. But there's that beginning view, similar to how the culvert system was designed to handle the water flow that had been there for 100 years. So there's that initial view as a trader that you're going to have of your entry analysis and how you structure your trading. The other view is an advanced view. We certainly had an advanced view of our capabilities, that storm system that came through, because it totally overpowered it. If you continue your trading, even if you're successful as a beginning trader, and a beginning trader is you're trading under 3 or 4 or 5 full lots, regardless of how much experience you have. So that when we get ready to look at advanced trading, you're trading with larger lot sizes. That's the key to the thing. And you know, in my videos and in the coursework and stuff, we talk about the issues of staging and compounding and all that other sort of stuff. When you hit around 8, you have the capability to trade 8 full lots or 10 full lots. Why? Why do things change when you start trading with larger lot size? The key rests around the change of the system, your system, not so much the Forex market system, but your system. When you're trading 3 full lots, you shouldn't be splitting them up into, bringing, 5 minis in here and adding 5 minis, and that's just craziness. You're confusing making money with trading. First, you have to learn how to trade. So as a beginning trader or a small trader, you're all in, all out. You come into the trade with 3 full lots, and you pull the plug and you go out with 3 full lots. It's really simple. I teach people how to work with that process, but within that process, build extensible rules. Extensible means you can add on to them and expand them, right? Such that the situation changes when you are trading large lot sizes. If I'm going into a trade, 3 lots, it's $30 a pip. You go all in, right? What if you're trading 10 lot size? Do you want to go 10 lots in? If you go 3 lots in and you get it wrong, you got a 10 pip stop, you lose $300. If you go in with a 10 lot, you're losing $1,000. That's a radical change in the size of the lot size and the dollar value than you're used to. So the change in the system, your trading, is going from 3 lots to 10. That's just like the culvert system in the water. We're going from 100-year process of water coming down that mountain, and people observing that and saying, oh, we'd like to control that so that it doesn't go all over the yard, so we'll build a culvert and an opening big enough to take care of that water. Well, climate change has changed everything, and now we're getting higher flow of water down that. So we have to change. The market has changed. We have to change our plant. We need a bigger culvert. Well, when you have a bigger culvert, there's more money involved. There's more. I mean, you can envision all that. I'm not going to beat this thing to death. When you go from trading 3 lots with a 10 pip stop at $300 loss to a 10 lot 10 pip stop at $1,000 loss, you got to ask yourself, do I want to risk $1,000? If you're trading 3 lots all along and you're successful and you're building up your bank, and all of a sudden you go in and start trading 10 lots all in, all out, and you take 3 losses in a row, you're $3,000 down. Now, how long did it take you to build up $3,000 trading 3 full lots? It's going to hurt you. And so that's where the breaking up of lots and staging them in. Now, I break that process up into 2 phases. One is building a position where you get your trading position, whereas if you have to bail out of that at a certain point, in other words, you set a profit target of 30 pips away or 20 pips away or wherever you're trying to get to, and it goes 5 pips or 8 pips and it starts to stagger and you decide to pull the plug and get out, what's the net value of the money that you've made? Have you made enough money to make the risk of taking the trade worthwhile? Now, you might only make 1/10 of a percent or 2/10 of a percent or 3/10 of a percent on your risk because you're only making maybe 3 or 4 pips. But you take that into consideration in your trading plan. If I'm going to be trading and I'm going to be taking this amount of risk, how much money do I have to make to justify taking the trade when the trade doesn't work? If you're following that. In the event of looking at a 10-lot position, you don't want to take a $1,000 risk on entry, but you're comfortable taking a $300 risk, then you would open the position with 3 lots. If it goes against you, you lose $300. If it goes in your favor, you build that position to whatever your comfort level is. Let's say you add another 3 lots, you've got 6 lots on there, and so 6 times, let's say you make 5 pips on that, you're $60 times 5, you make $300. Was that worth the amount of money that you had at risk? Well, probably not from a percentage standpoint, but $300 is $300. And if you made $300 every day, I mean, you're trading all around with this 10-lot position, so you're averaging X amount. But if you could only make $300 a day, 5 days a week, that's $6,000 a month. That's $72,000 a year on your whatever bank size it is that you're trading, making just $300. So that $300 is sort of a critical thing. I mean, if you're trading 10 lots, making $300, not very much. Okay, it's like 3 pips. But when you're evaluating how you're going to manage the change that you're going to have to facilitate in your entry analysis, what are the thoughts going on in your head? Are you just going to go in with 10? You know, when you get up to the point where I'm at, I'm trading a 6-figure account, and so I may decide to go in with 8 lots and then add another 8 as a build, and then go on and add lots from there. So the size of your entry number of lots, you're used to trading 3 lots at a time. Now you got 10-lot capability, but you still go in with 3, and then you build with another 3 and go on from there. Well, when you're having a 20-lot capability, maybe you start out with 10, and you take that $1,000 risk because you know that you're at a 60-40 trader, you're going to have a 20-lot win of 12 pips 6 times, and you're going to lose $500 4 times or $1,000 4 times. So you're way ahead of the game. But that's how you have to balance this stuff out. I don't teach beginners, and so because you can't learn this stuff as a beginner or just as somebody trading a couple of 3 lots. You have to learn how to trade first in order for this advanced stuff to make any sense to you. Any fool can sit down and show you how to compound or show you how to stage in lots and all that other kind of crap. But if you don't have the experience and you don't know how to gradually increase the number of lots that you trade and you're just throwing shit against the wall, you're going to lose your account. That's the unfortunate thing of it. If you're not careful, you're going to lose your account. So either figure this stuff out, and there's mathematical relationships that go into all of this stuff, that if you can match the math, then you're going to be successful. If you can't match the math, it means that you need to change your trading in order to make the math work. Or maybe the math is too aggressive and you need to loosen that up. By knowing how to trade, you then begin to learn how to do this stuff intuitively, and you don't need the math. What happens is that as you gradually begin to increase your lot size and how you're structuring your trade, you can look at the math behind it and you go and figure it out. It's just simple algebra, for God's sakes. It's not really that tough to do. You just have to know how to form mathematical rules to match the conditions that you're observing. That's what we do in physics, right? We look at a cannonball getting shot out of a cannon and we go, what are the factors involved? Oh, it's a parabolic arc, and it has certain velocity and it's certain weight, and it's going to drop out. If I have X amount of powder, it's going to shoot this cannonball a half a mile, and and you can work that out mathematically. And once you work it out mathematically, then you know how much powder to put in. But it may take you some experimentation first in order to say, hey, this works. What is it that I did? That's called dry lab, and you gotta kind of dry lab the thing. You can save yourself a lot of money by having somebody who knows this stuff teach it to you in consulting or through courses or whatever. But nobody out there really knows how to do this, because they're coming from the stock market and they're teaching Bollinger Bands and engulfing candle patterns and all this other kind of horse shit, or they're teaching you how to, you got to learn the fundamentals of economics and all this other stuff, and you got to know what the non-farm payrolls is going to do and all this kind of stuff. But that's all stock market stuff. We're retail traders. So there's certain things that we need to know, and most of the stuff, the 90% of the stuff, we don't need to know. But you guys are busy learning the 90% of this stuff. You're so plugged up with information, that's what's causing you to be unsuccessful. You just need somebody to show you, here's the key things that you need to know to get started. And here's the process that you go to get started. And then once you know what you're doing, then this is the next step. You're not going to jump into a Indy race car and drive around the track safely without having driven a regular car Kia on the country roads and then on the super highways before you jump into that car. I mean, I'm sorry. You're not going to take your $500 and run it to $100,000. You're not going to take a $10,000 account and replace your job income on a yearly basis. It doesn't work that way. The math doesn't work for you, and in practical applications, it doesn't work for you. And that's been proven time and time again. You look at some of the folks out there that are teaching this stuff of how to, are you trading at 200 to 1 leverage and all this stuff, and they eventually they get wiped out. But what good does it do to work all that time and then lose all your money? What good does that do? You lose your money a little bit at a time and learn how to gain more a little bit as you go, and then you take those principles and move them forward. That's the second module in my course. I start out with foundations, the base stuff that you need to know to form the foundation of what you're going to do, and then you learn principles. What are the principles that you're learning you're basing your trading on? And then what's the process that you use to implement those principles? So my course goes foundations, principles, process-oriented trading, and then advanced solutions. Doesn't make sense, right? But everybody else is writing, oh, this is how you size your bank and how you do this and how you start compounding and look at all the great things you can do. And it doesn't work. It doesn't work. In any event, the advanced considerations that you will run into someday when you start trading larger lot sizes, and you may be capable of doing the building and the staging at the 5-lot position, so you may hit this problem sooner than you think. You better know what to do. You better know how to break that trade up into reasonable pieces and why you're breaking it up, so that you can form a reasonable trading plan that when that trade doesn't work out, which there's about a 67% chance that it's not going to work out and go to fruition when you are staging in, because you have to extend your profit target out, right? I mean, if you're going to stage 10 lots in, and you start with 5 lots at the opening, well, where are you going to stage the next in? You got a 20 pip profit target, and you start out here and you wait 10 pips to stage the next 5 in. Your average is at 5, and when price comes back against you 5 pips, you're a jump ball break even, right? So that whole concept of where you're looking for profit targets has to change. But you can't just start out and say, oh, I'm trading 2 full lots, I'm all in, all out, and I'm looking for a 25 pip run. Because you're not going to get it, because you don't understand the momentum behind price action that allows your rules to say, I've got the conditions necessary for this trade to run where it needs to run. That's why this video is advanced Forex entry issue. Just one issue of many that you're going to have to consider in your trading plan if you're going to be consistently successful in your trading. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.